Hello friends and welcome to today's topic of contingent liability. As you can see, I have divided the whole definition into certain points which will be easier for you to remember the whole concept and understand the deeper meaning of the definition. So let's begin. Contingent liability equals to possible obligation plus past event, right? So it is an obligation, but it is a possible obligation, so it may or may not arise and it depends on any past event, plus the happening or non-happening of future event is not under the control of the company. So the possible outcome, right, which may happen is not under the control of the company or the organization. Best example is the lawsuit against your company. Let's say we have any pending lawsuit which is going on against our company, but we do not know that what will be the possible outcome of the lawsuit. We may or we may not win the case. So it is a possible obligation that either we have to pay off the liability, and which is a result of the past event, that is the lawsuit which is going already against our company, and the happening or non-happening of future event, that is either will win the case or will lose the case, is not under the control of the organization. So that is the basic definition or meaning of contingent liability. Now there is also one more definition to it. Contingent liability can also arise out of present obligation. Now you will say that, sir, if it is out of present obligation, then how come it is a contingent liability? But yes, it is possible. So present obligation plus uncertainty of economic outflow. Yes, so the outflow or the amount which has to be paid, right, we do not know, or there is uncertainty relating to outflow. So in that case, even a present obligation will be termed as contingent liability. Example is guarantor in a loan. Let's say you are a guarantor in a loan. So you already have a present obligation, because if the person who has availed the loan from the bank does not pay the amount, then in that case you will be the person who is liable to pay the amount. But there is an uncertainty of economic outflow. What if the person who has availed the loan already pays all the EMIs and installments on time? In that case you do not have any economic outflow. So under present obligation, if you do not have any certainty of economic outflow, in that case it will become a contingent liability. One more thing, if you have a present obligation but the reliable or reasonable estimate cannot be made, the word is cannot be made, and the example is workman compensation, in that case also it will be termed as contingent liability. So what is the difference? Here also we have a present obligation, but the estimate cannot be made reliable, right? A reliable or a reasonable estimate cannot be made. For example, workman compensation, if we have to pay a worker any amount, right, on behalf, or let's say because he got injured during the office hours, now we have a present obligation, but what will be the amount, right? We also have an economic outflow, but we cannot estimate the amount or estimate the amount of economic outflow, so we will treat it as contingent liability. So finally it brings us to what is meant by contingent liability when we compare it with provision and we compare it with a liability. So under provision we have a present obligation, but we have certainty of outflow and reasonable estimate can be made. So under contingent liability there is an uncertainty and also a reasonable estimate cannot be made. So these two words are changed in the definition of provision, right? So this is the main difference, certainty of outflow, and yes, reasonable estimate cannot be made. So whenever a reasonable estimate can be made and there is a certainty of outflow, you will treat it as a provision. And lastly, what is meant by a liability? So liability is again a present obligation plus certainty of outflow, but amount to be paid is known exactly, right? The amount which we have to pay to our creditors or the amount which we have to pay towards our bank loan is already known to us in advance, so that is why we treat it as a liability. But when we consider the example of provision for doubtful debts, right, we have a present obligation plus we have a certainty of outflow, but a reasonable estimate can be made because the exact amount cannot be made. So in that case it becomes a provision, and whenever you have an exact amount which is known to you, it becomes a liability. When both these terms are not included in your definition, it will fall under the contingent liability. So that's all for today. We'll meet again in the next video. Thank you.